Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for August 19, 2021. What is going on with the market here? Let's actually start our video tonight with the daily chart of the S&P futures. And I want to highlight just one simple thing, and it's this concept of rubber band snapbacks, which I've been calling in the videos, and what happens next. And the title of the video is going to be something about, will this be just another pullback and retrace up to all-time highs, or is this time something different? We don't know, but our trades are going to reflect that perspective. Is this just another of these simple pullbacks and rallies? And I'll highlight what I mean there. This is going back to the start of 2021, and we can see similar pullbacks and retracements and rubber band snapbacks in 2020, but it's this conversation. The market's just, in a broad sense, when anything trends, it does not trend straight up or straight down. It tends to wiggle and squiggle or swing. And that's the basis of swing trading, which is just playing the markets move from one day to the next, 1 week to the next, and staying in those parameters, not getting too far into the future. And that's all it is. So a swing trade, this is a swing down, this is a swing up. And of course, swing down all the way up. You can call them, again, rubber band snapbacks, like a rubber band. If you pull it too much, pull it too far, like this, it tends to snap back harder than if you pulled it a little bit less forcefully. But nevertheless, this is an uptrend all the way through, but it's not straight up. This is not what's happening. This is what's happening. And it's the concept of higher highs and higher lows. And this, again, is just related to the S&P, to an extent the Nasdaq, and the Dow. So let's just trace the market up. Let's just look at the downswings first. There's a downswing. There's a downswing. That took some time, but it was a short-lived downswing. That was a downswing. That was a downswing, and this is a downswing. So just going back to 2021, 1, 2, 3, 4, 5, 6, 7. And the same conversation takes place. Is this going to crack and be the reversal? Is this going to crack and be the reversal? Is this going to crack and be the reversal? Is this going to crack? So on and so forth. None of them were. Will this be the one? Past is prologue, and all we're going to do is use the framework. If it is, then absolutely yes. We're positioning to the downside. We'll be playing quite aggressively short on the intraday and swing accounts. But that's only if we sustain trade under, in my chart, the 50-day moving average, and that's going to be about the 4650 level. We might even extend that down to the 4300. So this is going to be 7th time in a row. 7th time's the charm, because the 3rd time was the charm. But it's in this context of a broader uptrend. This is the market. This is the broad conversation. The bond market is rallying up. So if we look at the bond market, that actually did get the reversal. So similar type of logic. Now, this is the future maybe of the S&P, but again, anything that trends does not go straight down. It goes the other way. So it swings to the upside. This is a retracement back up. This is the opposite of what we were just discussing in the S&P. These are contra swings, rubber band swings, but to the upside. And there was 1, 2, 3, 4, 5, 6, 7, 8. None of them were the trend reversal. But when the trend reversal did happen, it occurred on the breakout and rally above that 50-day moving average. And that came later, although the bottom of the market, as we look back, was in March. The reversal of the trend and the reversal of the down swings, that came later. And this is what we were watching in the S&P going forward. We saw similar moves in the bond market, but yes, it did reverse. And there was plenty of time to make decisions, plenty of time to put different positions on hedges or just outright bull positions for a trend reversal. But that took a long time to get there. And there was many, many more failed trend reversals. Any of them could have been seen in real time as reversals that did not yet occur. So that is what we're watching for, is any type of break beyond that 50 moving average that will shift, reverse, and definitively turn the trend of the market to the downside. In the Nasdaq, that is similarly in play, although we had larger bouts of volatility in February and into May. Nevertheless, the technology sector has made higher highs and higher lows. And this is another reflexive bounce in the uptrend so far. And again, the Dow Mini Futures, same logic. Within the context of its uptrend, its pullbacks, its swings, or its counter swings, or rubber band snapbacks are all played out. So as we go into the end of August into September, yes, the Fed announced that they will be tapering. Yes, that's on the table. And yes, I'm even of the mindset that's going to top the market and turn it lower. We have to go by the charts and the levels and the prices and use our positions accordingly. And if it does do that, then the evidence would shift to the downside. But we are not there at this exact moment as we record the video, not at the later part, or at least the 19th of August. Come back next week, and if we're here, then yes, that will be a trend reversal. But again, we've had the same videos, same conversations, the same positions, for good and bad, better or worse, losses or profits, as any of these other similar pullbacks against the market. And the one exception is the Russell. And the Russell is not, again, as the videos I've shown, it's not in a trend. It's sideways. Don shows this as well. The Russell, or the small cap index, and the same is true for the IWM, that is in a sideways trading range. And we trade that a little differently than we would a trending market or a trending stock. That would be positioning short from above or into the resistance levels. That's again 23.25 to about 23.50, and playing back to the midpoint or for mean reversion. Shorting above, coming back to the middle, or going long, playing similarly mean reversion. That's the mean. The mean's about in the middle or the midpoint, and playing positions to go back for the market to rotate back up, and that is playing again. The enemy, or the loss risk of playing what we would call fade techniques or fade trades, would be a breakout. And if the Russell does break, the downside activity will be entries to the short side of the market. But again, the same logic we're talking about for the Dow Mini Futures, for the S&P and the Nasdaq. This was not the reversal and a trend change in the Russell. This was also not the continuation of the downside. This was not the continuation of the downside. This was not a continuation of the downside. Of course, as we are live, this is the question, the comments, and how you're going to shape the trades and the future positions, swing, intraday, or otherwise. And if the market does break that 2100, yes, it will be to the downside. But again, let that prove itself and then join in. There is always plenty of time to make decisions in the market. Don't feel rushed. Don't feel stressed. Take your time in planning out your positions. Beyond that, gold, actually crude oil, we'll start with crude oil, did. So this is what we're looking for in the S&P, and I continue to point to this in videos, that the crude oil market, or CL, the futures contract, has actually made lower lows, lower highs. So this is in a downtrend. This has gone low, high, low, and the moving averages have shifted. So now we're looking at potentially an early reversal sign in crude oil. That does not bode well for the equity market. And that again is something to watch, that this time might be the actual breakdown. But again, let that price develop. Gold continues to trade within there's lots of lines on the chart, but all it says is it's a trading range. And on the broader perspective, gold is neither trending up nor trending down. It, like the Russell, is in a broader or longer sideways trading range. And we saw the bond market, which continues to trade to the upside, which by proxy means that the Treasury yields on the 10-year Treasury note have reversed. They have turned trend. They have gone to the downside. They are in a downtrend. And again, that's similar to where we're talking about the S&P with respect to rubber band snapbacks. As it trends to the upside, that's a rubber band snapback. That's a small one, small one, small one, small one. That's a steeper one. But eventually it does break under the 50-day moving average, and look how long it took even after breaking, supporting, and then turning. That's what I'm highlighting with the S&P and other markets. It's unlikely, although anything is possible, that it will just all of a sudden turn and go to the downside immediately, leaving you behind. There will be time to plan trades, to structure spreads, to put on in-out spreads, or any particular type of trade to play to the downside, if and when, or I should say when, not if, that will occur. Because markets don't trend forever. They neither trend forever to the downside, and they neither trend forever to the upside. They do reverse. And that's what we're on guard for as we go into August, into September here in 2021. As always, be careful and safe. This is Corey Rosamond with tonight's Theo video update for August 19th, 2021.